So today I'll be talking about the three types of business organizations. As we see here under the business forms, we have sole proprietorship, partnerships, and corporations. So sole proprietorship, it is a business owned by a single individual who is entitled to all the firm's profits and is also responsible for all the firm's debt. So basically, if you have any sort of liability that comes up, any lawsuit, whatever, you are liable 100% for that, and that could be under, a disadvantage of a sole proprietorship. But for the advantages, they're easy to form. They give you tax benefits, and you are the sole decider of what is going on with the income for the profits and how you will also figure out the debts for the business as well. Partnership. So partnership, the definition that we got from the reading was it is an association of two or more persons who come together as co-owners for the purpose of operating as a business for profit. So here we have two people, instead of just forming a sole proprietorship by yourself, two people that want to form a business as a partnership and to do it correctly. So the advantages here that we have, they're relatively easy to start. Taxed at the personal tax rate, and then you have access to funds from multiple partners. So rather than just going out by yourself and doing fundraising, you have multiple people going out and doing that. Disadvantages, so everything is obviously shared jointly, and then it's not always easy to transfer the ownership. In the limited partnership, there is the general and then limited. The general partner runs with the business and faces the unlimited liability of the firm's debts, whereas the limited partner is liable only up to the amount the limited partner invested. So the amount that you actually put into the business is what you're actually liable for. So rather than a sole proprietorship where you're liable for everything, you're limited to the amount that you actually invested initially. The corporation, if very large sums of money are needed to build the business, then typically the organization chosen is the corporation. So the corporation legally functions separately and apart from its ownership from the shareholders. The corporation can individually sue and be sued and can purchase, sell, or own property. So an advantage of a corporation would be the liability of the owner is limited to, again, the invested funds. It's easier to raise capital for a corporation. And then disadvantages, there's greater regulation, and then for the corporation you can also have double taxation of the dividends. And then we have the LLC, known as the Limited Liability Company. And I actually have experience with this recently because I started one a year ago. However, my wife recently just started one as well because she's getting into a new business and she was trying to figure out if she wanted to do an SP or if she was going to actually do a partnership. Well, she chose to do a partnership. She started the business with one of her colleagues, and they formed it. They were trying to figure out if they were going to do the corporation, but they ended up actually going with the Limited Liability Company because there was less liability on them that they would be holding essentially, rather than the other route. If for whatever reason they get sued or whatever horrible thing could happen. So the Limited Liability Company combines the tax benefits of a partnership, whereas a corporation has double taxation. The LLC does not. They have no double taxation of earnings, and with the limited liability benefit of a corporation, the owner's liability is limited to what they initially invested. So there you have it. Those are the three forms of business, whether it's sole proprietorship, partnership, or corporations. Thank you.